What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So M1 Finance threw things off for me. I'm still not going to complain for my buys. I wanted to throw 500 in TSLY. I was on the phone for them for half a day, so I kind of had a delay for a video for tomorrow. But I'm going to have a big video for you Thursday, and it's going to be big. And these 3 dividend stocks that I bought have excellent dividend growth. And by the way, if you watched my previous video with Target, I explained why I sold Target for a certain dividend growth stock. I feel good about it, but again, Target's a stock that, you know, I could sell tax loss harvest and then rebuy if they get their act together. So I'm not completely out. It's not like AGNC, you know, where I'm just completely out. So, but I really like my position in Pepsi. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check my dividend stock buys out right now. First one I threw in was Pepsi, sitting at $725.69. I got NNN REIT at $415.69. And I got Wiki Property. So I'm going to kind of reflect on my buys, and I feel pretty good about it. So I'm going to go over that. So NNN REIT is sitting at $38.17. They've been really down for the past 5 years. I did post a video about them. Average volume 1.41 million. Market cap is $6.96 billion US dollars. The G range is 37.75 to 48.21. A range is 37.89 to 38.24, and its previous close was 37.98. So there's a few things. I went over these guys. I'll have my video in the top right-hand corner of why I'm buying them, but I really like these guys. I'm going to go over the revenue trends and dividend history real quick, but these guys have been on fire, and a lot of people are capitalizing, like myself, with this high-yield real estate investment trust. The one thing I like, I'm on Seeking Alpha, is their FFO growth. It's 4.77%. AFFO growth is 2.75%. Revenue growth is 6.28%. The dividend growth in 10 years is compounded annual growth rate 3.37. 5 years is 2.85, and 3 years is compounded annual growth rate is 2.36. So I'm using Seeking Alpha as a reference real quick, and I do like that the FFO growth is important for their dividend history. Because, the dividend growth, which I'll go over shortly, but I'm going to show you the revenue trends. This is the one thing that is important, because 90% of what a REIT makes has to go back to investors. So let's go over their revenue trends. So as a real estate investment trust, the revenue goes up, I'm very happy. Usually that increases the confidence of the board of directors to hike dividends, usually. Long as FFO is strong. So annually in millions US dollars, 2016 533, 2017 584, 2018 622, 2019 670, 2020 660, 2021 726, and 2022 773. So there's an increase in the revenue. That is good. Now let's go over their dividend history. This is what I like. And for their price, I really can't say no. The dividend growth is a little bit slower. I'll go over that. So here's our quarterly distribution: 2015 44 cents, 2016 46 cents, 2017 48 cents, 2018 50 cents, 2019 52 cents. Little stagnant, and then they hiked their dividend in 2021 to 53 cents, 2022 55 cents, and then they just cracked 57 cents. So again, you're going to get a high payout ratio with REITs. So remember, 90% of what they make go back to us. Number of dividend increases the last 5 years is 5. Dividend growth in 5 years is 2.13%. So if you bought one share, you made $226 with a 5.95% dividend yield. That's pretty attractive. So I went over Pepsi, okay, but I want to go over Simon Properties Group because I just added a little bit of a distribution percentage to Simon Properties Group, and I'm going to start buying them. So Simon Properties is a real estate investment trust. They're sitting at $115.48. Average volume is 1.34 million. The market cap is 37.78 billion US dollars. The tier range is 8602 to 133.08. Day range is 114.17 to 116.08, and its previous close was 114.22. These guys have not rebounded since the pandemic. One reason why I'm buying them. Guys are big, and that's one thing that I've emphasized. SPG is a symbol of why I've been buying them. So I'm going to go over FFO a little bit and their revenue trends and their dividend history. So these guys have been taking a beating, and their dividend growth is a little slow. FFO growth is 0.83%. AFFO growth is negative right now. Diluted growth is negative 4.10%. The revenue growth is 1.57%. The dividend growth in 10 years was 5.80%. In 5 years, they did do a cut because of the pandemic. It was negative 0.54%. In 3 years, it was negative 1.11%. So I wanted to show you that for just need to know the facts and some information. The dividend growth rate is rated as a B. It's not bad. So I'm going to go over a few more things. So these guys are back, and they're slowly gaining some ground. So this is what I like about these guys. I bought them. There's a dip. Now, I did do that with Target, but these guys still, they're making a comeback. So I can't say no. There's not a lot of a negative attention with them. And these guys have been around for a while. So I really like these guys. And things, I do think the future is potentially going to be bright. I can't, make guarantees. I'm not giving financial advice, of course. So 2016, annually in millions US dollars, 5,435. 2017, 5,527. 2018, 5,645. 2019, 5,755. 2020, boom, 4,607. Blame the pandemic. 2021, 5,116. And then 5,291. So they are slowly making a comeback. So their revenue trends are going up. That's good. Let's go over their dividend history. I'll show you when they got hit really hard. So here's their dividend trends. Their quarterly REIT. They distribute quarterly dividends. So 2010, 60 cents to 80 cents. 2011, they cracked 90 cents. 2012, 95 cents to $1. And then 2012, 105 to 110. 2013, 115. 120, 125 to 130, 2014, 2015, 140 to 150, 155. Then I'm going to jump to 2019. They were at 205, then they were at 210, and then the cut happened right there because of the pandemic. So they're still distributing a dividend. So that's one thing that is somewhat of a bonus. I mean, they still were distributing dividends in 2020, and they were 130, 2021, 140, 150 to 165, then 2022, 170, 175, and then to 180, then to 185, and then to 190. It literally at the so there is a comeback. So let's see, 190. They're at 210 in 2019, so they're slowly creeping up. Now, you're going to see a negative dividend growth rate. That's a given. I mean, with their background, probably have to do a remix on them. Their background, it's kind of a given. So, and what they are, a tenant for. Payout ratio, according to Zach, 63%. The dividend increases in the last 5 years is 10. Bought one share, you made 760 with a 6.62% dividend yield. So this is one that I see potentially could be a really good dividend growth stock for me. Replacing Target, of course, with REITs, the way you report income. If I made $500 from these guys, I have to report as $500. So that's the one negative of these guys. But hey, you know what? I like high yield dividend stocks, ones that are stable. Okay, ones that are stable, this is just very, how do I want to say this? The strategic plan, because I want their dividends to start buying Pepsi. I'm going to go over the last REIT for you. And we keep properties of sitting at 3141, 3.91 million average volume. Market cap is 31.83 billion US dollars. Year range is 29.29 to 35.07. Day range is 31.24 to 31.57. Its previous close was 31.31. So I'm going to go over a few things with them. So here's some really good information, and I'll refer to my previous video, which I'll have at the end of this video, with the REITs that I bought and what I really like about Wiki Properties. So the one really good thing is the FFO growth is 13.84%. This is per Seeking Alpha. The AFFO growth is 7.03%. Earnings per share diluted growth is 14.76%. That's all good stuff for REITs. Revenue growth, 34.90%. Dividend growth, compounded annual growth rate in 5 years is 29.86%. In 3 years, it's 9.44%. And they did pretty strong during the recession. And I'll go over their dividend history. So here's their dividend history. Starting in 2018, it was 16 cents to 26 cents, 29 cents. Then they cracked 30 cents in 2019, 2020. And then they still hiked their dividend in 2021. So they recovered. Still were okay. Look, no dividend cuts in 2019 to 2020, in the middle of a pandemic. They actually hiked their dividend in October, which is quite impressive, from 30 cents to 33 cents in October 2020. 2021, 33 cents to 36 cents. And then 2022, 39 cents to 42 cents. Payout ratio is 75%. Number of dividend increases last year's is 6. Dividend growth in 5 years is 8.01%. So if you bought one share, you made 156 with a 4.98% dividend yield. So I'm going to reflect real quick. I really like Pepsi stock, and something drastically happens with Target, I will buy Target. But like drastically happens in a positive way. I sold Target, and I kind of explained to you why I sold Target. Could I rebuy it in the future? Sure. I'm not completely anti-Target as a dividend growth stock. Simon Property Group, right now, if you look at the three, the dividend growth rate might be a little bit slower, and dividend sustainability could be an issue, but they did cut their dividend during the pandemic. That's kind of a given and expected. Wiki Properties is very surprising, as well as NNN REIT, and I'm really targeting these two REITs right now. So Thursday, I kind of went big. I'm very excited for the changes that M1 Finance has done. And I'm going to explain to you my dividend investing strategy and what I did. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos, and so that you don't miss Thursday's video. You guys take care and have a great Tuesday. As a reminder, I'm going to go over my disclaimer. So do not take this YouTube channel in any form of financial advice. This is strictly for entertainment purposes only. Seek investment advice from a financial advisor. Investing is a risk. You can gain a lot of money, you can lose a lot of money. I have lost money in the past. I've done some tax loss harvesting, which I'm not too upset about. I am doing this strictly for my entertainment purposes and revealing to you my dividend investing strategy. I provide my rationales. Some stocks that I buy, I may sell them if I don't like them. So do not take this in any form of financial advice, and make sure you do your due diligence before you research and buy stocks. Again, seek advice from somebody that's certified to give financial advice or a financial